Hello everyone, let's look at today's major news from the world of finance and the economy, valuable for any finance student or anyone who wants a quick overview of the global developments shaping countries and markets. October 22nd brings some absolutely massive developments. India and the US are on the verge of a historic trade deal that could slash tariffs from 50% to just 15%. Gold and silver just witnessed their biggest trade in years, and India's Diwali sales just shattered all records at 6 lakh crore. Plus, there's a major India shakeup with Warner Bros potentially up for sale. Let's dive in. Story 1. India-US trade deal breakthrough. So the question everyone's asking, is the India-US trade deal finally happening and what does it mean for our economy? This is huge. According to multiple reports, India and the United States are in the final stages of negotiations for a trade agreement that could reduce US tariffs on Indian exports from our 50% to just 15 to 16%. This would be the most substantial trade breakthrough between our two countries in recent years after months of disputes and stalled negotiation. What's the catch? What does India have to give in return? Here's where it gets interesting. The deal is reportedly linked to India gradually reducing its dependence on Russian crude oil. We currently import about one-third of our crude from Russia, so this is significant geopolitical commitment. Additionally, India may allow higher imports of certain US agricultural products like non-GM corn and soya meal. This could address long-lasting US concerns about accessing India's highly protected agriculture market. When could be this announced? President Trump and PM Modi spoke on Diwali, and Trump confirmed they discussed trade extensively. The formal announcement could come at the ASEAN Summit later this month. Trump even said during the White House Diwali celebration, "We talked about a lot of things, but mostly the world of trade is very interested in that." What does this mean for Indian exporters? This is massive relief. Lower duties on Indian exports would help restore competitiveness in the US market, especially for textiles, pharmaceuticals, engineering goods, and gems. After tariff escalation hit our export hard, a rollback to 15 to 16% could boost export volumes by up to $25 billion annually and add around 0.5 to 1% to India's GDP. For context, the US, India's largest export destination, with bilateral trade exceeding $200 billion. Our exports to the US had dropped from $8.01 billion in July to $6.86 billion in August. But there are challenges, right? Absolutely. Balancing geopolitical expectations with domestic energy security won't be easy. Russian oil comes at pricing advantages, and we have long-term supply contract. On the domestic front, opening up sensitive sectors like agriculture and dairy to US product could face political resistance. Similarly, American lawmakers might demand stronger IP protection before fully endorsing the deal. Story number 2. Gold and silver crash. Now the precious metals market. What just happened to gold and silver prices? This is dramatic. Gold suffered its biggest single-day drop in 5 years on Tuesday, falling 5.3% in a single session. Silver crashed even harder, down 7.1%. Globally, gold fell from its record high of $4,381 per ounce on Monday to below $4,080, a drop of nearly 6.7% from the day's peak. What triggered this massive sell-off? Three things. First, massive profit booking after gold hit unprecedented highs. When you are at record levels never seen before in history, the temptation to book profits is huge. Second, a stronger US dollar made gold more expensive for other currency holders. Third, improving trade relations between the US and China plus optimism over India-US trade talks reduced the safe haven demand. What about India? How much did domestic prices fall? In India, gold prices dropped 3,380 rupees per 10 gram. That's about 3% from the record high of 1,32,294. Silver crashed even harder domestically, falling 8,800 rupees within just 2 days to around 1,63,900 per kilogram. That's nearly a 19% drop from its October 15 peak. The timing is interesting. Stock markets were closed in India, right? Exactly. The multi-commodity exchange was closed on October 22nd for Diwali Bari Pratipada. So when trading resumed on October 23rd, we're expecting gold and silver futures to open significantly lower. This whole day slide brings relief to retail shoppers, especially with the wedding season coming up. A sharp decline could boost over-the-counter gold purchases across major cities. Is this a good buying opportunity or will prices fall further? Market watchers say while the correction may worry short-term investors, long-term fundamentals for both metals remain strong. Inflation concerns, geopolitical tension, and central bank buying are expected to continue supporting it. But traders are advised to stay cautious amid high volatility. Gold is still up about 6% this year despite the recent correction. Story number 3. Record-breaking Diwali sales. Now for some positive domestic. How big were Diwali sales this year? Absolutely phenomenal. India witnessed record-breaking Diwali sales of 6.05 lakh crore, comprising 5.40 lakh crore in goods and 65,000 crores in services. This marks a 25% jump over last year's 4.25 lakh crore, making it the highest ever festive sales in India's trading history. What drove this incredible surge? Two main factors. First, the GST rationalization that kicked in from September. The government reduced tax rates from 4 slabs to just two main ones. Most goods now fall under either 5% or 18% GST. The impact was immediate. 72% of traders surveyed directly linked higher sales to lower GST rates. Second, the Vocal for Local and Swadeshi Diwali campaign resonated deeply. 87% of consumers preferred Indian-made goods over imported products, leading to a sharp decline in demand for Chinese items. Which sectors saw the strongest growth? Mainland retail, particularly non-corporate and traditional market, contributed 85% of total trade. This shows a powerful comeback of physical markets and small traders. Sector-wise breakdown: grocery and FMCG contributed 12%, gold and jewelry 10%, electronics 8%, consumer durables 7%, ready-made garments 7%, gift items 7%, home decors 5%, and furnishing and furniture 5%. Did this create jobs? Yes, the festive season generated approximately 50 lakh temporary jobs. This is significant employment creation during peak festive period. Finance Minister Nirmala Sitharaman highlighted these numbers, emphasizing how GST rate cuts and strong demand for Swadeshi products drove this surge. Story number 4. Smartphone market update. Let's talk tech. What's happening in India's smartphone market? India's smartphone market grew 3% year-on-year in Q3 of 2025, shipping 48.4 million units. But here's the catch. Analysts are cautioning that this momentum may not extend into the year-end festive period. Who is winning the smartphone race in India? Vivo leads with a 20% market share, shipping 9.7 million units. Samsung is second with 14%, followed by Xiaomi and Oppo, each at 6.5 million units. But the real story is Apple. Apple re-entered India's top 5 with 4.9 million units and a 10% market share, its highest ever shipments in India for Q3. What's Apple doing right? Three things. First, locally manufactured iPhone 17 series made up a fifth of Apple's sales this quarter. Second, aggressive festive promotions, especially in smaller Tier 2 and Tier 3 cities, paid off. Third, easy financing options and aspirational appeal. Apple's year-on-year growth is 47%, are outpacing Samsung's 9% decline. What about Samsung? Why did they decline? Samsung's down 9% year-on-year. Urban consumers are delaying upgrades due to employment uncertainties and rising cost sensitivity. Rural demand has remained stable but isn't enough to offset cautious urban behavior, raising the risk of inventory built up in Q4. What's the outlook for the full year? Omdia expects full year 2025 smartphone sales to see a modest decline, reflecting a fragile recovery cycle that's sensitive to economic factors. The Q3 momentum was largely sustained through incentive-led channel push rather than pure consumer recovery. Story number 5. OpenAI launches Atlas browser. Now a major tech development. What's OpenAI's new browser all about? OpenAI just launched ChatGPT Atlas, their first ever web browser built around AI. This puts them in direct competition with Google Chrome, and some analysts say this could be Chrome's first real competitor in years. What makes Atlas different from regular browsers? Three key features. First, it has ChatGPT built directly into the browser. You can get help anywhere on the page without switching tabs. Second, browser memories. If you turn this on, ChatGPT will remember key details from your web browsing to improve responses and other smarter suggestions, like retrieving a web page you read a file. Third, agent mode. The browser can take actions on your behalf and work as a collaborator. How does it work practically? You can open a ChatGPT sidebar on any page to summarize, analyze, or handle tasks directly in the same window. In any form field, you can pull up ChatGPT to write or edit without switching tabs. The new tab page lets you ask ChatGPT a question or enter a URL to see faster, more useful results in one place. Where is it available? Currently only on Apple's Mac OS for all users types, Free Plus, Pro, and Go users globally. Plans are in place to expand to Windows, iOS, and Android shortly. Why is this big deal? Sam Altman called this a rare once-a-decade chance to rethink what a browser can. OpenAI has over 800 million ChatGPT users. By transforming its chatbot into a portal for online searches, they could attract more web traffic and generate revenue through digital advertising. But there's also controversy. This could significantly impact online publishers. A ChatGPT may summarize information so effectively that users might stop clicking on conventional web links. Story number 6. Warner Bros. Discovery open to sale. Here's massive media story. What's happening with Warner Bros. Warner Bros. Discovery, the owner of HBO, CNN, DC Studios, and Warner Bros. Movie Studio, just announced it's open to a sale after receiving unsolicited interest from multiple parties. This is one of the biggest potential media consolidation stories in years. Who's interested in buying? Multiple players. Paramount Skydance already made an initial bid of around $24 per share, nearly $60 billion total, but Warner's board rejected it as too low. Netflix, Comcast, and even Amazon have been mentioned as potential interested third parties. Netflix co-CEO Ted Sarandos clarified on their earnings call that they are not really interested in WBD's legacy media networks, only potentially the Warner Bros. Studio and streaming operation. What assets are we talking about? Massive IP portfolio. Warner Bros. Own Harry Potter, DC Comics, Batman, Superman, Wonder Woman, Lord of Rings, Game of Thrones franchises, plus CNN, HBO Max streaming services, and several cable networks. Why is Warner Bros. Considering a sale now? The company had announced plans in June to split into two entities by mid-26, separating its fast-growing streaming and studio operations from its struggling cable network. But receiving multiple acquisition offers before the split made them consider. CEO Dave Zaslav said, "It's no secret that the value of WBD is receiving recognition by others in the market. What's the challenge for potential buyers? The massive $35 billion debt Warner Bros. Is carrying. Any buyer would gain control of a major Hollywood studio and leading streaming platform, but would also take on this debt burden." Shares jumped 11% on the news, but analysts note Warner Bros. Is valued at around $45 billion current. What happens next? Warner's board will evaluate several options, proceeding with the planned split, selling the entire company, or pursuing separate deals for its Warner Bros. Or Discovery Global businesses. Bank of America estimated the company's value at closer to $30 per share given its rich portfolio. Story number 7. China's WTO complaint against India. Now a trade friction story. Why is China filing a WTO complaint against India? China just filed a formal complaint at the World Trade Organization alleging that India's production-linked incentive scheme for EVs, batteries, and automobiles violate global trade rules. Which specific scheme is China targeting? 3 programs. First, the PLI scheme for advanced chemistry cell (ACC) battery storage. Second, the PLI scheme automobile and auto component industry. Third, policy to promote manufacturing of electric passenger cars. What's China complaint exactly? Beijing claims these measures condition eligibility for incentive on the use of domestically produced goods, discriminating against Chinese origin products. They say this violates India's obligation under the SCM agreement, GATT 1994, and the TRIM's agreement. What's the scale of India's investment in these schemes? Substantial. 18,100 crore for ACC battery production and 25,938 crore for automobile and auto component manufacturing, plus GST cuts on automobiles. These measures are designed to make EVs more affordable in India, boost local manufacturing, reduce import dependence, and create jobs. But wait, isn't this hypocritical from China? Absolutely, and experts are calling this out. China itself has long benefited from massive subsidies to build its EV industry. Today, about 70% of global EV production originates in China. Chinese manufacturers like BYD have leveraged domestic support to dominate international markets, overtaking Tesla in sales. Meanwhile, Chinese EV makers now face overcapacity and declining domestic sales, making India a key export market. So they are simultaneously restricting rare earth exports while complaining about India's subsidies. How should India respond? Experts say India must resist yielding Chinese pressure. The intent behind these programs is not to marginalize international entities, but to foster local production in emerging technology sectors. India could invoke the infant industry defense at the WTO, though this requires meeting specific criteria. Is this case going anywhere? Not quickly. The WTO's appellate body has been non-functional since December 2019, so almost all disputes end in limbo. Even if the dispute goes through panel and India gets an adverse ruling, India's EV support program will likely be safe since the WTO's dispute settlement isn't functioning fully. Story number 8. Fed rate cut expectations. Finally, let's talk about global monetary policy. What's the Fed expected to do? The US Federal Reserve is widely expected to cut interest rates by 25 basis points at its October 28 and 29 meeting, bringing rates down to a range of 3.75% to 4%. Out of 117 economists surveyed, 115 experts expect this cut, and there's a 97% probability of a rate cut according to the CME Fed Watch tool. Will there be more cuts this year? Yes, 71% of economists expect another 25 basis points cut in December as well. This is a shift from just a month ago. Fed economists predicted only one more cut for the year. Why is the Fed cutting rates? The Fed is prioritizing labor market concerns over inflation. They are implementing risk management cuts, a forestall further labor market slow, even though inflation remains slightly above target, partly due to tariffs. The weakening jobs market is bigger immediate cut. What's complicating the Fed's decision? The ongoing government shutdown has delayed key economic indicators that the FOMC relies on, so when they meet, they may lack typical economic updates from government sources. However, alternate data suggests a general trend of weakening job market alongside limited inflationary pressures. What's longer-term trajectory? Current forecast indicate rates might approach around 3% by 26. Financial markets have fully priced 2 additional rate cuts for this year, showing strong conviction in further easing. Closing. So what's the bottom line from all these stories? 3 major takeaways. First, India is positioning itself brilliantly on the global stage. The potential US trade deal could be transformative for our exports, even if it means balancing geopolitical pressures on Russian oil. The massive Diwali sales prove domestic consumption is strong and responding well to policy interventions like GST cuts. Second, markets are adjusting to a changing global environment. The gold-silver correction shows profit book after record run, but long-term fundamentals remain intact. The Fed's rate cut signal continued support for growth despite inflation. Third, technology and trade wars are reshaping industries. OpenAI's Atlas project challenges Google's dominance. China's WTO complaint against India's EV schemes is more about strategic competition than genuine trade, especially given China's own history of massive subsidies. The India-US trade deal, if finalized at the ASEAN Summit, could mark a turning point. Lower tariffs restoring export competitiveness, coupled with strong domestic consumption and infrastructure investment, position India well despite global uncertainties. For investors and businesses, focus on India's structural growth story. The banking sector momentum continues. Regulatory reforms are creating opportunities. Domestic demand remains robust despite global headwinds. Stay pragmatic, stay informed, and keep watching this space. If you found this breakdown useful, smash that like button, subscribe for daily finance updates, and let me in the comments which story you found most interesting. The India-US trade deal, the gold crash, or OpenAI browser launch. Thanks for watching, and I'll see you tomorrow with more updates.